Hello to all traders and welcome back to another market review brought to you by Orbex. So it seems that gold is still hanging on above the 2300 handle, which has become a firm support and quite a big psychological level for a lot of traders, seeing that if we did have a confirmation break below this particular level, we could see quite a dramatic sell-off back down to the mid 2000 area. And you know, if we just see the dramatic effect that the dramatic sell-off that we've seen from the CPI data, NFP data, and a host of other fundamentals coming out of America last week, we can just see the dramatic moves in the market. Dollar still remaining elevated though, which is quite remarkable after it's picked up a few dollars on the index as well. So let's just have a quick look on the intraday charts for gold, and as you can see here, after the dramatic sell-off from its record peak at 2450, we saw quite a bit of heavy consolidation before over $100 was wiped off the yellow metals value. And as you can see here, nice firm double bottom roughly around 2285 before being just slightly picked up by the 20-day moving average there. As you can see here, very much grinding along that. RSI's moving into the neutral zone, so not really getting too many signals there. Just going to wait for the next big piece of information coming out of the markets. Well, it's not going to be on one side of the ocean. It's going to be actually in the UK on Wednesday, when the Bank of England is expected to have a good CPI reading, dropping quite dramatically, and in doing so, will we see the Bank of England actually start cutting their rates along with the Bank of Canada and the European Central Bank? And will it give the Fed quite a lot to think about as we go into their next meeting, which is going to be in a couple of months? And they're looking at September basically if they're going to start cutting rates, but we'll wait and see. At the moment though, let's just have a quick look on the prices of gold. So really I'll just point out this 2300 handle once again, because as I said, a lot of traders and analysts that I've been talking to have mark this out as quite a big psychological level. If we just go back to the daily chart quickly, we'll just see what a dramatic effect a break at this particular level can be. And as you can see here, we've been just kind of punching above its weight for quite a while now, since we did break past it in April, at the beginning of April, so just over a 2-month high. And we're just seeing now that if we do have a correction and a confirmation, then price action can easily start moving down to the lower regions and have, you know, quite a big $200-300 move to the downside. So this is what a lot of economists are expecting if it does happen. But as long as we remain elevated, hopefully for bulls at least, we'll have more of a good run in the meantime at least. Let's take a quick look on the dollar index. Like I said, it still remains elevated, you know, quite a big choppy action there, looking for a V-shaped recovery to the downside. But since then, after bouncing around the early area of the 104, we are now trading over $1, $1.50 above the area that we have been seeing the big bounce, moving up to the mid 105. But as I said, it is looking elevated. It's looking like dollar will probably lead the way for the next couple of weeks in terms of strength. It is actually having quite a big detrimental impact against its big neighbors, the euro, the pound. The FX pairs have flipped the other way, so we could see the dollar index still moving higher in the next few trading sessions. But as always, we'll keep you up to date with all the comings and goings in the market space on our YouTube and Telegram channel. So stick to us, stay ahead, trade responsibly, and we'll speak again next time around. Bye for now.